the Trading Market Technicals morning call video for Thursday, April the 4th. Red across the board, Dow down 111, S&P down 16, gold down 9, continues to sell off, NASDAQ down 35. Mostly small caps had a major weakness on the other sectors, but as far as the sectors that were really leading the markets low were the retail, home builders, consumer discretionary basically really took a big hit yesterday, as well as financials. Now, yesterday in the video I mentioned I had showed you some market divergence, and it actually eventually played out to a real nice trading day yesterday. Markets trended lower all day. Unfortunately, I was not here. I was attending a funeral. So, but one day doesn't make a trend, and I'm sure there'll be plenty other days that I could capitalize on it. But anyway, so apologize for not being here yesterday as far as being in the trading room, but I did have to attend to a funeral. Okay, back to the markets. I showed you yesterday about market divergence, and we did have it, and still playing out. Now, we are up in the pre-market about 7 handles, and the reason why was Bank of Japan last night launched a pretty aggressive monetary easing under new leadership, and it wasn't just the aggressiveness of the easing. It's really just following through from the new leadership. Now, the reason why markets are up as well is because usually when one eases, other world central banks will follow suit as well. So that's what they're thinking about, and the markets are up again today. Does that hold? Who knows? But it's something to think about and something to digest. As far as the morning call videos, you know, these videos are to keep the trader, day trader, investor, swing trader on the right side of the trade, to either protect their portfolio or to intraday make money in the intraday session if you're a day trader. And I point out key levels, key pivotal points, and sectors, so you could actually dial down into that sector and look for, you know, stocks that are either weak or that are strong for that one particular point sector that I'm pointing out. So just kind of keep that in mind, guys. These videos are actually really good, and they can really help you stay on the right side of the trade. Again, at least protect your portfolio, or have you create some great trade ideas out of these videos. All right, so I want to get right into the charts. Yesterday, bullish percent SPX, market was rolling up. This was starting to make lower highs. I pointed it out here and here. Pointed out here. We had a little bit of a dip, and sure enough, we did get a little bit of a sell-off yesterday. Now, I always say one day does not make a trend, and I would never, even if I was here yesterday, be looking to start laying out shorts. I want to see continued market weakness. Now, if the market is going to be up today, as it indicates in the pre-market session, I want to see the market make a lower high today, and then again ultimately fail with whatever today's low would be, and then start getting aggressive, start looking to short, nibbling short first, and then as the market is going in your favor, start adding to it. And that's how you make money, and that's how you manage your risk properly. Okay? Now, take a look at the, we have also showed you this New York Stock Exchange summation that's on a daily chart. Weeklies are on sell signals now. I mentioned that to you last week. But if you look at it, RSI making lower highs. We had our New York Summation Index made a lower high from here, and then we had the markets go up, and then sure enough, we have this big red candle. We'll see what happens, but when we have this choppiness and volatility, one day up, one day down, one day up, one day down, one day up, 2 days down, 2 days up. This is what we look at for market tops, at least tradable market tops. Now, we are not there yet. I am not calling one, but I just want you to guys be aware that when we have a pickup in volatility, which is a good thing, right? We want markets to at least move up and down. Stick with the trend if you're a day trader, because you only have 6.5 hours a day. There's no reason to be buying weakness or selling strength unless it's for a really short-term scalp trade. But other than that, you want to be sticking with the trend, because right now, you know, sometimes the stock doesn't materialize the way you want it, just to do it the next day, and it's kind of frustrating. So really stick to the trend of what you're trading, at least for that day. Okay, now let's take a look at China. China continues to break down here. I've been showing this for weeks and weeks. We'll see if this market holds up today. But lots of red flags that the market is really looking to correct here. Hasn't really done so yet. And again, one day does not make a trend. But as you can see here, FXI China just broke the 200-day moving average in a large engulfing candle. Look at the EEM, same thing. This is now yesterday's data, okay? So today it would probably be up from last night's Bank of Japan easing. But here we go again. This is still above. This is the emerging markets, but I'm not liking what I see here. So this is really a good red flag for, if you're a bull, say I would definitely be using caution here. U.S. dollar came in again, sitting on the 20-day moving average. We want to see how the relationship to the equity markets are, or they're going to change, how they're going to change, in the coming weeks and months. Do they trade together in a pair, or do they trade inversely correlated like they had been for the last couple of years? But only time will tell. All right, let's go right into the charts. Here's the USO, the oil ETF, and as you can see here, the very large golfing candle back down to the downside, and we're still within this bear flag here for now. Any more longer, this thing will get a little too long in the tooth to be a bear flag. It'll just be some sort of an upward channel. But right now, we still have not broken below this 33.45, call it. So we need to really see that to be broken to the downside. Here is GDX. Now, the bullish percent gold miners index is way oversold. So at one point, you're going to have a tradable bottom here. I am not telling you or advocate anything to be looking to buy GDX right now. GDX, as you can see here, this looks pretty decent of some sort of capitulation, but only time will tell. We'll see what happens in the next couple of days. Maybe a small day trade in GDX as far as just to play an oversold bounce. But look at the volume, increasingly picked up. We did get a break of that small inverted head and shoulders. I'll take that out today. And now we're back down again, and we're probably going to look to test this lower trend line of this downtrend channel here, which would come in somewhere around $33. Okay? Take a look at the spiders, and as you can see here, spiders broke the 20-day moving average and then closed just on it. We did have another big distribution day. You can see that via volume. As you can see here on our stochastics, we're still reading overboard. So the next target area would really be the longer term pivot would be this area here, this 153. Now, in the longer term, meaning in the next couple of weeks, this is going to be a big area, because if it does break and close, you're going to want to see that one-time back test of this long-term trend line, which coincides nicely with the 50-day moving average. Actually, right about there. Yeah, somewhere right in this area here, which coincides nicely. And this 153 area, once it's broken, I think you're going to have all bets are off to the downside and get into that correction. Don't forget, we are in seasonal trends right now is lower. We are going into some market weakness. April, May, a little bit of June. And then we slow down July and August, and then we try to get that fall rally again. But this is looking so far constructive, and we'll see what happens today. We'll see if the market takes everything back again today, like it has been 1-2 day down, and then market rallies for 6, 7, 8 days. So we'll take a look. We'll continue to monitor it. Right now we are in this little trend line, lower trend line here, 153.65. Up into the 166.70. So we have a 3-point range in the spiders. So this here will be our first sign that we are starting to head a little bit lower. Here's just a 30-minute, just a closer look that we're back into this horizontal channel here like we have been for the last probably about good 2 to 3 weeks. And again, here's the S&P cash. As you can see here, we did break down with a large engulfing candle. We held that 20-day moving average. 15.55 was support. We did break below that. So now we're going to be testing the 15.30-ish area. Somewhere in here would be a pretty good test. 15.40, 15.50, 15.30 in this area here. But we need these on a closing basis, guys. This is where we want to have this on a closing basis. Okay? Otherwise, market just dips down and then runs back up again. But now is the time to use some caution. But I will tell you, looking pretty ripe for a good correction. Now, again, we'll see what happens with the Bank of Japan easing if other central banks start to follow suit. That would spark at least a little bit of rally, I'd say, for at least 2 or 3 days, and then we'll see where it goes from here. Transports looks really ugly now. We had this little uptrend channel here. We broke that. We had this sideways consolidation here, this lower trend line, 108.45. We broke that. And then we had this longer term trend line here, here, and now here, which we broke. So now we're going to need to recoup at least half of this, and then we'll see where we go. So the next failure, the next lower high, should confirm this market to go lower again. We'll see. And here's the IWMs, risk off, broke the 50-day moving average. As you can see here, 3 down days, large distribution day, good gauge of risk telling us that this market is now taking off risk. So this is very critical here, guys, to watch. Watch the IWMs, very, very important. Here's the XLF in this large bearish rising wedge formation. We are just on the bottom of it, coincides nicely with the 50-day moving average. A break below this and a back test would start looking for me to get in short and start looking for some of the banks. And this is where you can come up with some good trade ideas via this videos. Because if I'm showing you sectors and I'm saying, hey, the XLF looks like it's breaking down, get into that sector, see which one's the weakest ones, and start looking for an entry. And that's how you play these videos and make some money on them. Diamonds, okay. We did break back down again. We're in the trend channel here into the sideways consolidation. We are now sitting on still above the 20-day moving average. So this is the strongest of the 5 that we follow, but only for so long. Once the bigger sectors, the big leaders that we follow, the transports and the NASDAQ, when they start to break down, like I said, they usually follow suit. And especially when you have the semiconductor sector, which I'm going to show you in a moment. Okay, Apple held nicely. We just right into that 428, 430. So it really needs to hold this 420. Has to hold. If it breaks 420, you'll see a flush into the 400 area. So far, so good. It held up really well yesterday when you had extreme market weakness. All right, now, SMH. This is where I've been showing you for the last several days. You can't have a good full-blown rally without without at least tech and the banks following suit with the other 5 sectors that we follow, right? Big engulfing candle, broke down here. This is a big support line. We broke it, and now we're headed much lower. So I would be really cautious here. Watch this. I think you'll have a decent trade in the semis, but not until at least it corrects itself. Maybe we get down to the 200-day moving average. Usually when it breaks to 50, it wants to test anywhere somewhere close to this area. So time will tell. We'll see. But like I said, the last several days, watch the SMHs really weak, and you could have literally started shorting some of the semiconductors if you wanted to, if you're looking for trade ideas. And here's the Qs. Qs held up pretty well. Again, Apple has a big weight in it. We just held this trend line, but a break below this, I think you'll see the 50-day moving average and possibly lower. All right, guys, that's really it today. Let's see what happens if we can hold up some of the gains. I wouldn't even mind really a weak bounce today and then fail tomorrow, rolling into tomorrow, and then that would really get us, really set us good for some shorts for next week. But again, only time will tell. Don't get aggressive. Don't look picking bottoms or picking tops. It really is not a good way to trade. It really could be detrimental to your trading account. Have a great day today. Keep your stops in place here. Let's be nimble. Markets are turning. Market volatility is picking up. Therefore, that we will be getting much more active in the trading day. Have a great day, everybody.